Alright, hello everyone, and welcome to the video of the 1000 day challenge. This is day 579, so let's get things started. Alright, so first and foremost, you will see a further drop in terms of experimental trade setup, so that's definitely something to bear in mind. So in addition to that, I've also faced some further losses for my experimental trade setup. So right now I'm actually re-evaluating it because I took set to a cap of a max of $100 loss per month in terms of the experimental trade setup itself. So as of today itself, I realized that from the start to now, I think I started here. So approximately started this based on 579 days is around 18 months itself. So definitely once I hit the cap of negative 1,800 loss, what I'll do is I will put into a hard stop and reduce my trading position size even further down. So right now, actually, I'm trading around $10 position size for my experimental trade setup with a max cap of around 4 to 8 trades per running concurrently itself. So moving forward, I believe after today itself, you hit a $1,800 cap, which I had for the monthly loss itself for this particular setup. Then I'll be reducing it further to just $5 loss per trade. And in addition to that, I'll be capping it to half of it, which is just 4 trades maximum instead of the 8 trade maximum itself. So that's something to bear in mind. So until I get a bit of a continuity of sustainability wise, then I will readjust the potential to actually turn it around. So that's something to bear in mind. All right. Otherwise, if you look in terms of the daily market structure update itself on S&P 500 US market, tentatively things still looks a little bit more bearish because it still remains of the bearish market structure. But the good thing is there's actually a lack of a selling pressure itself, as you can see on the daily chart. So that's definitely a good sign if you're looking in terms of the S&P 500 and Nasdaq itself. So even though there's a red bearish candlestick, we actually open in the middle of it, which is a very good sign. Same goes for the Nasdaq, we actually open in the middle of it just as well. And yeah, both are very good sign in that sense. And then for AHR, it's a little bit less bearish, more bearish in the sense that we are still keeping tightly below the 20 exponential moving average on the daily chart, which is not what you want if you want to break above it. But of course, staying right below it is not necessarily a bad thing right now. As long as there's buying pressure, we can accumulate right below it before we actually break through successfully in that sense. On the other hand, for KWAB, it's actually extremely bearish right now because we're nearing the bottom of the critical support and we are not finding any strong bounce in that sense. So I do see potential that there is a highly likelihood that we will trend towards the uncharted territory. But for myself, I will take it as is I'll hold it through simply because I do not see the point of selling it out right now because the potential rewards is much greater than the risk that I'm facing right now. That even if we do fall, we could potentially fall another 10, 20, or even 50%. But if you look in the grand scheme of things from the top to the bottom, it's probably another 20%-ish. So it doesn't make sense to actually sell right now if you look in terms of risk to reward perspective. And then finally for Bitcoin wise, it's definitely leading towards the upside because it seems to be breaking the words here. So if you can actually break above here, it will tentatively be a very good shift for momentum itself. Because on the daily chart, it looks very nicely bullish. It's just on the weekly chart. There's some sort of indecision over here. So right now you can see that the 20 exponential moving average on the weekly chart is currently at 44.9K itself. So just take it as 45K itself. So right now, if you can break above and close above there, you'll be a very good sign. So you need to break strongly above, even up to 48K-ish, and then for bear support, they'll tentatively mark potential swing momentum itself. So that's definitely something I want. On a forward chart, I'm not taking a risk right now, even though tentatively we have a breakout trade, but I don't see this as a nice consolidation pattern just yet. So I'm not going to enter a breakout in that sense. All right, otherwise, that's more or less about it. If you guys have any questions, feel free to put your comments below. I'll see you guys tomorrow. Take care. Bye-bye.